Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, Chief Technical Analyst with Sticky Trades, and I have a lot of good news for you, especially when it comes to the economic front. Now, at first glance, it may not seem like good news, but for those of you who have put spreads or those of you who have bearish positions, I think you're going to welcome the news as we decipher it moving forward. Remember, next week, next Thursday, we have the Jackson Hole Symposium. So my forecast, as you will see across the board, I believe we're going to see a little bit of a rally just before that symposium, Monday, possibly into Tuesday. And then we'll have to see what the Fed is announcing on Thursday, along with the unemployment claims that are coming out Thursday during the day as well. So let's take a look at the technical charts here. You see DIA, and it's hard to see it, but my downside target there was hit at 349.65, and we've gone a little bit further than that target right there. Notice that we're very, very close to hitting this downside target. I think we will eventually hit that one, but notice what's happening with the volume today. We had a drop in volume on the way down. That is bullish. Take out your trading checklist and measure the buy signals versus the sell signals, and the drop in volume is bullish. We have a wide divergence from the price and that 20-period moving average. That is bullish. We have a pivot point on the stochastic after the stochastic reading here is the lowest it's been all year with an oversold condition and pivoting higher. That is bullish, and you could see the same thing applies to the CCI coming out of an extremely oversold condition, pivoting up. And there you have it. More buy signals than sell signals. And so for next week, I'm going a little bit higher. I'm not pulling on my bullhorns. I'm just going a little bit higher. I think we're going to rally in DIA up to 347.50. So keep that in mind. Option traders, if you have some puts or some put spreads, you might want to maybe add positive delta to that. That's totally your decision, but it's something that I'm doing on my end. So that is DIA. If we go in alphabetical order here, look at IWM, same story. We had a gap down on the opening here today. It was looking pretty grim for the bulls, and we have a downside target right there, 188.72 that is hit. Look at the oscillators starting to pivot higher. The CCI and the stochastic both going up. My upside target on IWM is 186.90. So again, short-term bullish condition into Monday, possibly into Tuesday. And we'll have to see what happens on Wednesday right before Jackson Hole. We look at QQQ. That is still moving to that fan line. Remember, when the most extreme fan line in the sequence of fan lines is broken like this one has, there is now a 90% chance that the price will move to the next fan line in the sequence. It doesn't always do that in a direct sort of way. It'll zigzag its way, but I think we're going to see a little bit of a rally, and then later after that, I think we're going to make a move back into that. I know a lot of people in July, right around this area right there, right at that high, they were told to close out of put spreads. You know what my position is. Dance with the market. Learn how to take in premium. Pay the cost basis down and follow the charts. This looks like a very severe downturn in this moving average. You see that 20-period moving average is still going to go lower because the price is still down below that moving average. So while I do think we'll see a very short-term bounce, I'll put that line in there for you. I think QQQ could move all the way up to 362.50. And then guess what? I'm going right back down. I'm going further out in the forecast. But first, let's stick to that target of 362.50. We'll have to see if the volume drops on the way up. If it does, then I will follow through on the midweek report to see whether or not that downside target into late August holds at 353.74. Again, moving on in alphabetical order, here we go, SPY. Take a look at that. Downside target hit, absolutely. Went one more day beyond that target. We have an increase in volume, but that increase in volume is on a green candle as the oscillators are moving up. I think SPY is going to rally, and I'm going to show you why. I normally don't talk about the E-minis, but if I put in /ES and look at the E-mini for the S&P 500, you have very much it looks like a hammer candle right there, very close to a hammer. So this wide divergence on ES is most likely going to play out on the buy side for the short-term bulls. So again, going back to SPY, you could see why my upside target is set right there at 438.98. Now I'm going to look at two more things. I'm going to look at the VIX. I'm going to look at SLV for you. The VIX is showing a shooting star. That's number one, a shooting star and a bearish harami. Last time we saw a shooting star was here. And what happened? The VIX dropped. Here was another shooting star. What happened? The VIX dropped. What do I think could happen here? Well, I think it's going to follow suit. I think that shooting star is going to lead us lower in the VIX, which again could mean higher prices in the S&P. I'm not going to go all the way down, although there is an open gap down there that the members and the viewers make sure I'm very much aware. We've not hit that downside target yet, and that is correct. But gaps do fill. The question is when. We don't know when. In the meantime, I think the VIX is going to drop to 1641. That would cause the S&P to rally along with the other major market ETFs, like I said. So expect that short-term bounce, and then you got to keep an eye on the volume right across the board. Now, finally, before I get into the geopolitical news, I want to look at SLV, and you can see that we have a bullish harami right here. We have the oscillators moving up. We have a gap above the market here. We have another gap above the market here. So I think the gaps are going to act as price magnets. My longer term target on SLV is 22.35, and that goes out to all of the silver traders. Now, let's take a look at the geopolitical news. First and foremost, this came out earlier. Fitch warns that it may be forced to downgrade multiple banks, including JP Morgan. Let me tell you, they downgrade JP Morgan. This is being one of the more, I would say, significant institutional holders. They're usually in the top 8 to top 10 shareholders in the equity markets. They may be forced to sell out of some of those positions to balance out their balance sheets, but we'll have to see. Keep an eye on that story. Another story that I've been talking about is what's happening with the banks as far as credit. Credit is drying up. You can see that this is not a current chart. It's going back to July, but you can see that the downturn in banks issuing loans is on the way down. So as the credit crunch follows through, less and less money will be available to developers, to business owners. And let's face it, credit makes the world go round, especially in the world of business. And so when that comes to a halt, business comes to a halt. And when that happens, people fear and they hold on to their dollars and they try to pay the bills the best that they can. But in many instances, you could see here that the delinquency rate on consumer loans is going through the roof. We haven't seen this in a long time. This is pretty dangerous because people are defaulting. This is the prelude to bankruptcy when you see signals like this. And this is just a 45-degree angle where delinquency rates are on the rise. Now, we talk about recession. The Fed is giving mixed signals again. I'm going to get to that in a moment. But what is stagflation? Well, that's when we have a drop in the GDP, increase in unemployment, and a drop in demand because people are holding on to their money. But in the middle of all this recessionary talk that we have here, we have inflation that is still on the rise. And that inflation is hurting everyone in the pocketbook, including those who have been considered the rich, right? The six-figure salary set. According to Bank of America, the data is showing that even those folks that have had expendable income and have not been more or less upset by any recession. In a lot of instances, those are sale days for the rich and famous, right? But these are people that are feeling the pinch just like every one of us. And when they stop spending to buy the big boats, the fancy cars, and the big homes on the beach, that trickle-down effect, it really affects everyone in the economy, and that adds fuel to the fire when it comes to recession. Now, we talked about this last month where we even had some of our own business owners within our membership talk about how in their own companies, people are tapping into their retirement savings. Well, this was reported on Yahoo Finance earlier this week. and it's getting worse. What's happened? Credit card debt is going up. The delinquency rate is going up. People don't have cash. They're tapping into their retirement savings. And that is, again, another ominous sign that the recession is full speed ahead, or at least on the threshold of that happening. Now, one of our clients, our long-term members, if you will, is Mary. Mary and I had a conversation while she was in Panama. We were going over positions and looking at the market, and she was telling me about how many barges are anchored out waiting to get through the Panama Canal. Well, I talked about this and I was scratching my head because I just did not know why the Panama Canal would be so low. And that's because the drought is what the locks rely on in the canal. So it's not fed by ocean waters or tides. It's fed by the lakes. And if the lakes go dry, there's not enough water in the middle of the canal between the locks to have these barges pass through. And right now, there's 154 vessels floating around out there waiting to go through, and their loads have to be lightened up a bit to be able to more or less alleviate the draft on these, so they don't draw the water as much as they would on a heavy load. And so you could see that 40%, look down at the fine print down there, 40% of all U.S. container traffic travels through the Panama Canal every year. 40%. So this is going to put a hurting on the supply chain until we get some rain out there and have things go back to normal. Well, when you think that's bad, look what's happening in China. Talk about a drought. Well, they're having a financial problem with Country Garden, which is the #1 developer. This is going to make the Evergrande debacle look like kindergarten in comparison. They have a house of cards that are standing on very, very shaky ground right now, and China has asked some of their funds to avoid selling in the midst of the market sinking. Imagine that. China is asking these funds not to sell. Well, if you were a fund manager, and what would you do here? You're gonna take the hit for your country's mistakes? Well, I don't know. I'm not going to comment on that, but China's in deep trouble there because if they're telling their fund managers to hold off on selling, it's only a matter of time where they're going to be forced to sell or liquidate just to keep up with the overall downturn in the market. Now, this is where I got to talk a little bit about what the Fed has said this week. They said that the rates are going to continue to go up, but they said that they don't believe that there's going to be a recession or that we're avoiding a recession. Now, this is an absolute contradiction as to what we're seeing in the Fed survey alone. Remember, the Fed is thinking that, oh, we're going to avoid this recession. There'll be a soft landing, no problems. But the Fed survey itself, which is a survey that surveys professional forecasters, this is the highest I've ever seen it, by the way. This has gone vertical, meaning that we are looking at the most anticipated recession ever in the history of our economy. So that's going vertical, and it looks to me with the inverted yield curve and everything that we were talking about with the money supply shrinking, there is no way we're going to avoid this recession. I don't believe anything the Fed is saying at this point, but make sure that you are protecting yourself in this market with good risk management principles. Now, I want to talk about something here that's really touching my heart. Many of you have seen the tragedy that's taken place in Maui, and I am making a call to all of you who feel in your heart that you can give at least a little bit. Last year, we got hit here in Florida with the hurricanes. I did a drive to help with some of the relief for those families that were suffering from the loss of home and even the loss of life and family members and such. But if you look at these fires and you're watching the news, it's absolutely devastating. Now, we have friends in Maui who are on the ground. We call them boots on the ground. And Pulani is one of those native Hawaiians that are out there on the ground trying to help people reorganize their lives. Now, again, I am not going to push this hard. I'm just making mention of it. Here is a website. If you feel like giving, then please do. Even if it's a single dollar, all you have to go to is this website. I'll leave the link in the description box below. You can click on that call to action to donate. Again, if you want to donate $1, $5, or $1,000, it doesn't matter. I just ask that you give that heavy thought and try to help those who are in need, because I would agree, and I'm sure you would, that if you had your life upended, you would be looking forward to getting assistance from family members and friends to help rebuild your life. And I consider myself a friend of the human race. And again, I'm not going to pound the table too hard on this one, but if you find in your heart that you can give, just please go down there below in the description box, click on that link, and go to it. So with that, you have a great weekend. Stay tuned. Next week, I have the midweek market report coming out to our members, and then we'll have another weekly market report to follow on Friday. Thanks again. I'll talk to you on the next video. So long.